Welcome everyone to Twitter Spaces with Blue Jay and Techemynt. And today we have Fran, the founder of Techemynt, speaking with us to give us a better understanding of the crypto landscape in New Zealand and how they are building out the stablecoin NZDS. Yeah, and welcome, Fran. And for those of you who are here, kindly like and retweet to get more of your friends on. And if you have any questions throughout, you can just press the bottom right-hand corner to tweet your questions, and we will go through them after. And yeah, welcome, friend. And I guess let's get started with the questions. Let's get to know you a bit better. How do you get into crypto, and what is Techemynt?
Thanks, Blue Jay. Glad to be here. Always a pleasure. So yeah, look, I've been in Bitcoin since Bitcoin was 10 cents a piece in 2010. So I'm part of the furniture in this industry. We started out by just looking at the global financial crisis and how money is fundamentally being questioned as to what it is. And then I think in January 2013, I reread Satoshi's white paper, and then I realized that money is now programmable and predictable and finite and all the rest, that Bitcoin has become a fourth superclass of assets. So we thought the world is going to need a lot of infrastructure. How is Bloomberg and Thomson Reuters going to quantify what's going on here and track everything? So the first business that we set up was bravenewcoin.com, which you may have heard of, which is a lot of people know CoinMarketCap and CoinGecko. We focus entirely on the enterprise end of the spectrum with that business. We supply indices to NASDAQ and Icon and Morningstar, so on and so forth. We help quantify and create price discovery and power futures, options, and swaps over time. And then as I was involved with a number of entrepreneurs and early companies in the early days, I was fortunate enough to be surrounded by exceptional people. So I co-founded the most liquid exchange in New Zealand, Digital Asset Exchange, or DASIT X. Created Blockchain Labs. I created Techemynt Capital, which has done a whole range of advisory, capital raising. We've raised over $550 million between 38 different clients or partners over the last 6 years. You may recall projects such as Bancor or Chainlink or Salt Lending. We did all the tokenomics for those, and we raised their money. We acted as escrow, and some of them went on to become multi-billion-dollar companies. We've been around for a while, and we had this experience. And then when it came to Techemynt, it was a billionaire in New Zealand that wanted to see the creation of a New Zealand dollar stablecoin. They were a big investor in Centre, Circle USDC, as well as every other business in the early days, from Coinbase, Round One to Kraken, so on and so forth. And we had that sort of fine blend of operational, technical, and financial experience to create a gold-plated, bulletproof stablecoin that's regulated and not practicing fractional reserve banking practices. So every token in existence, there's $1 that is sitting in a bank account and not being speculated with, unlike some of the other stable coins out there. So yeah, just let me know which areas you want to duck and dive into, and I'm happy to dive into whatever territory you like.
Yeah, sure. Yeah, it's a real pleasure to have you here. This is the first time I've heard someone enter Bitcoin at 10 cents. That's really early. And yeah, with the number of companies you founded and you are still a part of till today, that's astonishing as well. Yeah, I guess what about prior to crypto, before 2010? What were you doing then? And yeah, how do you get into crypto?
Yeah, sure. I guess that's a good question. So I have a Master's of Entrepreneurship, which is a Master's in Business Administration, MBA, but a lot more practical, hands-on, and interesting. I used to work in the publishing industry. So I used to work for IDG and Fairfax. And you may recall some publishing magazine titles such as PC World and Computer World, Reseller News, CIO Magazine, all those sorts of magazines. And it was just distinctly remember the cover of PC World was, "Is your enterprise ready for the cloud?" It was back in the era when everything was going online. Publishing was a dying industry, it still is, and everything was going into the cloud. So one of the magazines was called the Unlimited magazine, and it was all about exponential technology and entrepreneurship. And that's what inspired me to get a master's of entrepreneurship. And so I've always been in sales, I've always been in business development, and I've always excelled and been exceptional at complex multi-stakeholder management. As boring as that sounds, the world is a conglomerate of interests and forces that are pulling and pushing you as an entrepreneur into any given direction. And so the ability to understand macro trends and navigate through products market fit and path to market and the ever-shifting sands of global commerce is very helpful if you're trying to build a business that is offering products or services to a changing world. And so when I discovered Bitcoin, I realized this is my sweet spot. The world of money is exceptionally broken. Anybody that's looked into the nature of money will understand basic facts, such as the Federal Reserve is about it as Federal Express. It's a private enterprise, right? And the world doesn't have to be this way. We don't have to live inside of a debt-based money system. So I got very inspired by the promise of Bitcoin in particular and blockchain to create what we describe as scarcity inside a digital medium and to offer the world simply a plan B. It doesn't have to be this way. You could simply say, no, I'll do it a new way, and I'll buy some Bitcoin or I'll buy some stable coins and stake them, and I'll become my own bank. And we're still very early. I'm sure you hear that a lot, but we're still very early. And we have at least a couple of decades of exponential growth and mass market adoption ahead of us.
Yeah, glad to hear that, especially when I didn't join in 2010. But yeah, glad to know that we are still early somehow. And yeah, I guess let's focus a bit more on your stablecoin that Techemynt is issuing. You said earlier that every dollar of the stablecoin is actually in a bank account. I guess how do you guys promote transparency with regards to having the reserves in a bank account, and what kind of attestations you provide, and I guess how frequent are they?
Sure. Yeah, so look, if you understand the problems of the real world, this is what we wanted to avoid. 40% of all dollars, US dollars in existence, were created in the last 2 years. That's completely and utterly unsustainable. When you go to a bank and you say, hey, I want a mortgage, I've just bought this house, or I want to buy this house, it's $1 million, and I have $200,000 deposit, they will literally create the other $800,000 out of thin air and using your property that you're purchased or about to purchase as collateral to justify the other 80%. Any rational mind would understand this is a deep systemic risk and frankly utterly insane. So we looked at the problems of the old world and we thought, let's not use the same principles as that are creating systemic risk and all these issues in the world today. So from the offset, we thought, what is our business model? Our business model is very simple. We want several $1 billion doing absolutely nothing under investor and deposit guarantee schemes, earning maybe 2% in the bank account. And that's it. And that's a great business model. Yes, we can get into lending, borrowing, mortgages, all kinds of things on top of that. But if we empower the community with a governed, gold-plated, regulated stablecoin, then the developer community out there has the trust. So let me turn it back on you. What is the most valuable commodity in the world? What's your short answer for what is the most valuable commodity?
Most valuable commodity, I guess, is oil.
So the most valuable commodity in the world is time. You cannot buy more time.
Okay, great one.
Right? What is the second? What is the second most valuable commodity in the world? I'm not going to torture you with trying to answer this.
You can go ahead and let us know.
It's narrative, right? If you can, like a magician or a comedian, you can convince an entire audience or a crowd to think or feel in a particular way, that means you can push through policy. That means you can get away with anything, right? So the world runs on narrative. And if our narrative is, hey, we're not going to deploy the problems of the old worlds, right? What we're going to do instead is we're going to have radical transparency, proof of reserves, proof of KYC, AML, CFT, those things. And we're going to get one of the big four auditing firms, which in our case is Ernst Young or EY. And we're going to do a report every 6 months about our compliance process, but we're going to move that to real-time proof of reserves attestation. Then that builds this level of trust where developers and entrepreneurs, they can come and build on top of what we're doing. They can say, we trust these guys. We know that every dollar in the bank is one token in existence. We know that there's what's called a bearer trust. So that means that I can't touch the money, my staff can't touch the money, you can't touch the money. All of it is governed by a operating procedure and protocol that's audited by EY. That builds trust, a lot more trust in fractional reserve banking practices. And that means that then developers and neobanks and trade finance and all these new open banking solutions that are coming out, they have the trust to build on top of us and use our APIs and have accounts directly with our mints. And then they can issue and redeem always at exactly $1 without hesitation or delay. And so I think we have gone beyond Tether for sure. We've gone well beyond USDC, Circle, so on and so forth. And you understand that centralized stablecoins with good governance, they're fundamentally different to algorithmic stablecoins and their experimental nature and their attack vectors like Luna and Terra and so on and so forth. So for the foreseeable future, at least for the next sort of 5 to 10 years, there is a role for centralization, but I view it as a hybrid model where you have centralized pillars of good governance, good compliance, but good radical transparency. And it gives the trust so that users build on it, you get a network effect, and then you decentralize more and more over time. So that's the approach that we've taken.
I see. And yeah, you mentioned the auditing of your governance and I guess also the bank statements. Yeah, how frequent are these attestations and where are they available? Just curious.
They were available through our social media and our website. They're currently every 6 months. We're going to move them to every quarter as we grow. But as I said, we're doing a special pilot that I can't reveal the big names behind it, but we're doing a special pilot for real-time attestation just for the proof of reserves.
Wow.
Right now,
nice.
Yeah. Right now, the proof of reserves it's not so important to say, here's our bank statement. If any whale or market maker calls us and say, hey, we really need to know every single month your bank statements that they match the amount of tokens, we do provide that, but we don't publicly disclose that. We go through a sort of very formal and frankly, ridiculously expensive audits for that. But the auditing, you must understand, is not just how many dollars exist in the bank, how many tokens exist. It's about, are you actually compliant? Are you just some guy that's like clicking a button and minting tokens, and then EY comes along and it's actually the processes, the compliance processes that are audited as well.
Okay, nice. And yeah, I guess that really helps, especially if it's real time attestations or being able to have proof of reserves. And yeah, that really goes far beyond what we currently get with even the biggest stablecoin providers like USDC and USDT, which I guess they do monthly attestations to even weekly for USDC now. But yeah, and I'm even more important question we have with regards to your stablecoin is, let's say for myself as a retail investor parking my money in your stablecoins, what can I currently do with the New Zealand dollars on chain, and what protocols can I interact with?
Sure. So firstly, it's important to understand that the New Zealand dollar, before you even think about stablecoins, the New Zealand dollar is the 10th most liquid FX pair on the planet. There's literally hundreds of billions of dollars traded every month, notionally. And conventionally, New Zealand being this first world, English-speaking, low corruption ecosystem, it's been the carry trade. So when there's risk in the markets, like plenty of risk today in these conditions, a lot of sovereigns, other governments, cashed up companies with huge fiat reserves in their bank accounts, even high net worth individuals and family offices and private equity, they will actually have multiple currencies as part of their reserves, including the New Zealand dollar. So when you digitize a dollar into a stable coin, it makes it much more usable. It makes the utility explode. You can program it. You can move it across borders a lot faster, so on and so forth, outside of the SWIFT network. So what can you do with it today? We asked ourselves this question 9 months ago, and we thought what we need to do is we need to create our product, and that's how we view the New Zealand dollar stablecoin. Our product has to be more useful than dollars sitting in a bank account. Because if you're at NAB or ASB or BNZ or any of these banks, and you say, oh, look, I've got $100,000, I've got $1 million, what can you do for me? They will say, oh, we'll give you 3% or 4%, or if you're lucky, 5, 6%, and you lock up your money with us for 9 months or 12 months or 18 months, the term deposits. And meanwhile, the rate of inflation in New Zealand is 8% at the moment, the CPI. So you're actually losing money by locking it up with a bank in a term deposit. So can we offer APY that's better than inflation, but without the restrictions of term deposits, so on and so forth? And then we thought, where's that APY going to come from? It can't just be some kind of, excuse my French, but it can't be some shit coin that you put a mission curve over and it inflates this fake interest rate. And then what we realized is what's actually happening here is, it's hard to explain, but I'll try. Give me 45 seconds here.
Yeah, go on. Sorry.
And this is the biggest trend in crypto, the single biggest by dollar value, right? Forget NFTs, forget all of this. They're very interesting, and I support radical experimentation in altcoins and NFTs and all the rest. But the single biggest trend, and when you think about it, Bitcoin gave people the understanding that there is a digital way to transact and remit between each other outside of the BIS and SWIFT ecosystem. As Bitcoin's popularity grew, the advent of programmable money came about, mainly with the Ethereum EVM. And then, of course, there was all these other layer ones and everything else that came about. But then the barrier to entry to actually take dollars from any economy, whether it's Japanese yen or euros or USD was obviously the first and biggest. The barrier to entry to simply tokenize real-world assets or create what we call proxy tokens to real-world assets like Tether and USDC and so on and so forth, that became very low as a barrier to entry. And so now you can take dollars out of the bank account, you can tokenize them, and you can do the same thing that you used to do. You can pay contractors offshore, international remittance, cross-border payments, peer-to-peer payments, crowdfunding, whatever, and you can do it very quickly and swiftly. In fact, you know for a fact that I can say, here's that, thanks for drinks last night, here's that $20 I owe you. Boom, done. Transfer of stable coins. So people are going to be doing cross-border payments, remittance, speculation on FX, whatever. And so those trillions and trillions of dollars every day that are sloshing around in the old FX worlds, who makes the money in those? Right? You got FX brokers, banks, inter-dealer brokers, clearing banks, so on and so forth. You have a bunch of humans that are clipping the ticket and making money on your FX, remittance, speculation, whatever it is. And all of these billions have been pouring into and being digitized as stable coins, but the activity of payments and remittance continues. But now there's no humans. So where does the fee go? There's always a fee. Where does the fee go? So now it goes towards people that are adding liquidity. So bigger and bigger swaps can occur. That decreases slippage, makes the sort of swap price better. So what we're finding, if you understand the concept of Peter Diamandis 6Ds of exponential technology growth, you first have this period where things are deceptive, doesn't look like much is happening. Oh, who's going to use Tether for the first 6 months? And then all of a sudden it's everywhere. It becomes disruptive. And then it becomes digitized, dematerialized, demonetized, and then finally democratized. Right. So what we're finding is those huge revenue streams that were always exclusive to interdealer brokers and sovereigns and international banks, they're now being taken from that top level and they're being brought right down to the retail level. And it's resulting in people basically turning their personal wallets full of stable coins into a revenue stream, into a savings account. Right. And so it's hard to grasp without a visual presentation to go with what I'm saying here verbally. But this is the biggest trend in crypto outside of just self-sovereignty of holding non-legacy assets, if you will, where those activities of FX swaps and FX speculations, they will always continue. But now they've been dematerialized and democratized down to a retail level. So anyone in the world can go to dfx.finance and they can swap their, I don't know, USDC, they can buy some NZDS, they can then stake it, and they can get, I think it's 22% APY right now. And it's not rehypothecated. So unlike a term deposit, it's not speculated with, where the bank buys bonds and stocks and whatever. And it's still self-custodial. You still have the LP tokens in your hand. And the interest rate, or the APY, is all generated from all of that activity that never stops, which is people swapping NZD to JPY to USD to NZD to whatever. Those swaps continue. So this is the biggest and most exciting trends, biggest by notional value for sure. And we're basically just witnessing the decentralization of the foreign exchange market. So yeah, we're just a small piece of it. We're just tokenizing the New Zealand dollar as compliantly and reliably as we can, so that we can just add one log to this giant fire that's occurring.
Yeah, nice. DFX is also, I guess, we're good friends with them. We had Twitter spaces with them as well, talking about Forex on chain and how big of a market that can be. Yeah, as over time more non-USD stablecoins come on board and more of its activities are carried out on chain. But yeah, providing liquidity for swaps on DFX is one way I can use New Zealand dollars on chain. Besides, I guess I'm curious. Let's say if I provide liquidity for these swaps, what's the yield like? You said 20, just I previously heard 25%. Am I right? Or
Yeah, I'm just logging on to DFX right now, just to
okay, yeah.
check the
Sorry to
rate.
trouble you on that.
It's been bouncing between 20 and 30%.
That's amazing though. Yeah, like you said,
for 11 months. For 11 months.
to beat inflation, that's definitely one way. And yeah,
Yep.
so it's around 20 to 30%. And I guess besides DFX Finance, where else can a retail user use their NZDS?
Sure, yeah. Look, the FX is just the best example because of the interest rate, which draws attention and gets people to go, maybe I should swap some USDC, USDT into NZDS, or maybe I should stake it. NZD is a great currency, and I'm getting a yield that's better than inflation right now. But we have Jarvis.network. I love those guys. They're very smart operators over there. We have DeFi Basket, which is like token sets, but a next generation of sort of composite basket products. We're working on something called a macro hedge products. It's available. NZDS is also available through our. NZDS is currently 24.3% on DFX in terms of APY. So pretty. We have local off ramps, our own exchange that we use. There's many Ethereum wallets, Polygon wallets, so on and so forth. So you could say, here's that $20 I owe you in either a flatting situation where you need to chip in for cleaning bills or for just sending money to your friends frictionlessly and cheap without legacy world infrastructure obstructions, shall we say. But we have been quietly working with every single neobank in Australasia. And some of them are coming live shortly. We expect them all to be live by the end of Q1 next year. So for the next 5 months, NZDS should be like mycelium. It should just pop up all over the place. I really want to name names, but I simply can't because of non-disclosures. But trade finance, where you're basically using stable coins for trade finance scenarios and either remittance investments or depending what side of the trade you are. Neobanks, where you know what a neobank is. It's basically like a retail front end where you can wire in money and then you might have a Visa extension so you could swipe your card. The merchant gets dollars in their bank account, but in the background, it's deducting your stablecoin balance, for example, savings, borrowing, lending, mortgages, so on and so forth. It's just going to be everywhere because we want to empower other businesses to build on top of us. Once a stablecoin for any given currency is created and it's reliable and it's trusted, then you have these sort of tier 2 and tier 3 ancillary businesses that come along and say, oh, this is incredibly useful. I'm just going to integrate this for API into my app or DApp or bank or TradeFi or whatever the case is. And then it just makes their costs lowered and makes their remittance faster, and it makes their customers' experience better. So we're very focused on a B2C model where, anyone can effectively create an account directly with Techemynt. It's a $100,000 minimum transaction, but there'll be a growing number of exchanges to buy and sell through. There'll be a growing number of wallets, and there'll be a growing number of applications that offer yield or borrowing, savings, so on and so forth.
Nice. So basically more points of access to NZDS. And yeah, I do understand you guys, like what you're mentioning, you have DeFi integrations. You're also doing, Techemynt itself has support for users to onboard with a minimum of 100K. So just curious, which part of building out NZDS, are you focusing on? Is it more on the institutional adoption side, or from, I guess, Web 2, where you're doing more of partnerships with neobanks, which you mentioned? Or are you focusing even more on, let's say, DeFi integrations to provide more places for NZDS to earn yields and, as such?
Yeah, so if you understand the business model of Center, Circle, USDC, they went very institutional. They practically gave their reserves to BlackRock to extract yield out of, to work the market, so on and so forth. And then they will directly borrow and lend with major counterparties, with the 2C2s of this world and the free arrows before they collapse, and so on and so forth. We have chosen to go a more DeFi route. So yes, we are doing Web 2 in a sense of partnering with major neobanks to make NZDS as a depositable and withdrawable asset a lot more convenient. But we have this dual track. So we have only 5 or 6 major partnerships that will bring NZDS to the masses for neobanks, and that's all that's frankly required for the foreseeable future. But then on the DeFi side, it's about making our product more useful. And we started with TFX, we moved to Jarvis, we are working on a number of others to generate yields, because at the end of the day, you don't want stablecoins sitting in your wallet collecting dust. If we can show that, hey, not only are we more useful than stablecoins sitting in a wallet collecting dust, but we're actually way more useful than dollars sitting in a bank account collecting some pathetic amounts of interest for a very long lockup period. And so that's what we focused on, particularly as inflation is not going away. And we're finding that a number of high-end net worth individuals, or anybody with spare cash, basically, is either buying it from the exchange at a retail level or directly from the mint at a 100K sort of minimum level as wholesale. And then they're directly staking it into a growing number of places. So that solves an immediate need, but I look forward to the day when, I don't need to wait for some bank to do clearing and settlement, where instead you send me an invoice and I just pay you an NZDS. And then if you might not even need to sell it, because your invoices, you will pay them in stable coins too. And that day is quickly coming. In fact, we don't pay any SWIFT transfers for a growing number of contractors around the world. Everything is paid in stable coins, and they get it within seconds, and then they can move it to their exchange, or we send it directly to their exchange, and then they can bring it into their local bank accounts in Japan or Europe or US or wherever they might be.
Yeah, that's amazing to hear that you're focusing more on the DeFi integrations to provide more utility for your NZDS. And yeah, I guess moving further, within, let's say, the DeFi integrations, what sectors are you looking to focus on more? Because now, let's say, Jarvis and DFX are more on the Forex on-chain side. What about real asset lending and, I guess, cross-border payments? How are you guys expanding in those areas?
Yeah, look, there's a number of real world asset lending platforms that we've been speaking to. There's a number of on and off ramps, Ramp and Transact and Indacoin and all those sort of types that just simply make it easier to buy or buy off a credit card, so on and so forth. And so you can just consider them all as being in the pipeline, right? In the pipeline. We just simply don't discriminate. What we're doing as a startup, pre-funded because it's all self-funded to date, we're just saying, what's the biggest bang for our buck? Where can we basically get NZDS integrated? Is it a different chain, perhaps? Is it a particular community or particular project or particular neobank? And so we went to the market maybe 14 months ago, and we started having serious business development conversations. Some of those led to the ability to stake NZDS, and we found that's the most important. If you can just simply get a better interest rate than a bank is offering, that solves an immediate problem. But then how do we make it more accessible, not just more useful, but more accessible? So that's about on-ramps and off-ramps and integrating into banks and neobanks and so on and so forth. And again, I wish I could name drop, but I really can't due to these huge NDAs. But we've signed a lot of deals. Very exciting. And you're just simply going to see NZDS within New Zealand, Australia, and the Pacific Islands. You're going to see them in a growing number of applications. But think of it this way. If grandma wants to send money from Fiji to Perth in Australia, does she really need to know that there's blockchain inside? She just wants cheap, fast settlement, right? Cheap, fast transferability. So it's looking at my laptop right now. I got this little sticker that says Intel Core i9 10th Gen Insights, Intel Insights. I don't know what that means. I'm not a physicist or a computer engineer. I just know that it's a damn fast laptop and it's going to work. And so that's what blockchain is becoming. It's just blockchain inside all of these banking applications. So I sit on the Reserve Bank of New Zealand's Central Bank Digital Currency Advisory Board, for example. And we just had a second meeting up in Auckland last week talking about the flavors and concepts and features of central bank digital currency. And one of the things that was consensus was grandma doesn't need to know what's inside. She just wants to see safe, fast settlements with an element of privacy and security. And that's the same way we're treating our stablecoin. My personal opinion is that stablecoins are already doing far more than any central bank digital currency ever could do, without the intrusion and technocratic concepts that go with CBDCs. Yeah, look, I hope that answers your question in a roundabout way.
Yeah, it does. And yeah, you're right. I guess we should be... It's how Starbucks also use NFT rewards, but didn't call them NFTs. Yeah. I think it's very important to, especially to provide for more adoption, to just, I guess, not elaborate on the intricacies behind it. Like what you said, people just want to understand that it's cheaper and faster, and it does the job. And yeah, I guess that's what you're doing with the neobanks, just running the back end. And yeah, would there also be any, like, how are you going to educate users as well? Because on the neobank side, you're just running the back end, but still on the DeFi side, there's still a need to educate the users on the safety of your token, and yeah, where we can access these swaps and all that. How are you going about the education of using the use of NZBS and the backing, etc.?
Sure, yeah. Look, again, we have a B2B2C model, and that's for a reason. So if we go to a neobank, we need to earn their trust. They need to do technical commercial due diligence on us. So we make as much available on our website as possible, white paper, where to buy, how it works, all the rest, directly from Techemynt.com. And any user that wants to do their own due diligence, they can do the same. They can call us and they can say, I think you're full of bullshit. I want to see your bank receipts, and we will offer them. So it's all about trust, and it's ever increasing because look at this week, Credit Suisse and Deutsche Bank, frankly insolvent. Last week you had the Reserve Bank of Australia and the Australian Financial Review, the AFR. There's this article that says, the Central Bank of Australia is insolvent, but it's okay because they can just tax the population and they can print more, which is completely unacceptable, but beside the point. So trust in the real world is dissolving, and we put a huge emphasis on trust. But we don't need to go to every single user and say, hey, please trust us, because they're going to use these neobanks, or they're savvy enough as DeFi users, and they're going to do their own due diligence. They're going to do their own research. They're going to either call us or look at the website or look at our partners. We made sure that our partners are reliable and trustworthy as well. The key ones to begin with, like DFX. So, they're going to wire in through Polypay or Swift Transfer or whatever, some value into their neobank application. And they're going to have a credit card attached to that. And they're going to be able to go to their butcher shop and buy some lamb cutlets or whatever they're buying. And they'll just deduct their NZDS balance. But they won't distinguish whether it's NZD or NZDS as their balance on the neobank. right? That'll all be done in the background because we have this unfair advantage. If I go back to my entrepreneur days, that's the babble or lingo to use. It's an unfair advantage where we own New Zealand's most liquid cryptocurrency exchange. It's digital asset exchange. They have institutional APIs for these neobanks. So they create hierarchical accounts for every single customer of theirs on DASIT. So when the customer swipes a card and pays the merchant, it actually just deducts in auto sells in the market through our exchange, DASIT, their stablecoin balance. And then there's a wire transfer out to the neobank on a daily basis. And then the neobank pushes it through to the credit card payment facility on a daily basis or whatever the frequency is as well. And then the user, they have a clean experience, right? They don't need to know all this complexity in the background because that's the problem with 99% of all these DeFi applications. How do you bridge it to real world? And how do you make it as an experience that's not dissimilar to what they're used to with credit cards and banks? That's what they've lived with their entire lives. And so huge emphasis on user experience and user interface and all the rest.
Nice. And yeah, I really can't wait. Like you were mentioning earlier, using payments from via neobanks at merchants and not knowing that they're using NZDS at the background. We can't wait for the day, I guess, for Blue Jay as well to adopt that across Southeast Asia and beginning with Singapore. Yeah. And I guess we can also cover a bit on how is the current adoption like in New Zealand for crypto. And for, let's say, holders of NZDS, what's the profile of your holders at this point in time?
Because we're focused on interest rates to avoid inflation, we've run a campaign and I've done a number of workshops and in-person presentations throughout, a couple of dozen cities around New Zealand. It's mainly upper middle class or high net worth individuals that simply have some cash sitting in the bank. They no longer trust their bank and they want to beat inflation. So we've got a huge number of users that are just staking to beat inflation, and that's working great. So that's one persona. But then for these B2B2C sort of integrations into brokerages and neobanks and TradeFi, so on and so forth, they're starting to create direct accounts on behalf of their customers as brokerages. And so we don't have full visibility in their client profile, but from what we understand is they're basically staking and then giving a piece of that APY back to their client base as a fixed interest rate. So structured income products are being built on the back of what we've done. That's one persona. Then we've got the sort of corporate treasury persona where you just have companies that have surplus to requirements, cash in the bank, and it's not earning enough. So they want to, again, put it to work. And then you have companies that have huge velocity of money, that they're turning over small margin, high volume, import-export businesses, and they need to send money offshore to pay for whatever they're importing. And it's so much faster to use a stablecoin. So they're using that in combination with decentralized FX markets. So they're actually doing the swaps. They might pay in NZD, and then their clients at the other end of Europe might use DFX to swap NZD to Euro stablecoin, and then they'll move that Euro stablecoin to their European crypto exchange and then liquidate it back to their local accounts. And that's how the cycle works. As more and more friction is introduced into the global financial system because of sanctions and regulations or just frankly insane people making up rules as they go along, then it just becomes so much easier over time to simply use stablecoins. It's just less and less excuse. All you need to know is that there's a transparency and trust and reserves are actually exist in the background. But I think these use cases are going to grow. They're going to grow widely, right? We consider ourselves an infrastructure provider. We just want to tokenize the New Zealand dollar and then do what we can to assist its adoption, have other entrepreneurs and businesses utilize it and grow it. And then we will tokenize gold and we will tokenize silver and we will tokenize commodities and other currencies, perhaps the Australian dollar, the Brazilian real, so on and so forth. There's probably 20 years of just tokenizing real world assets ahead of us.
Nice. So Techemynt would be focusing more on tokenizing commodities right after successfully building out NZDS ecosystem and partners. Is that it?
Yeah, and other currencies. The Brazilian market is huge, for example. A lot of friends in Brazil and Florianopolis and Sao Paulo and all the rest. a huge crypto community. I think that's a big market. We could easily replicate our systems and our bearer trust and our EY audits and all of the sort of back office compliance. We could do this for any currency very quickly. But then all the other stablecoin providers, Tether, USDC, etc., I'm going to avoid talking about the decentralized ones. They're not really focusing on commodities at all. There's not very good solutions to tokenize gold, for example. And the bullion market is huge. I think gold and Bitcoin are about to explode in value over the next few weeks. And I think that's going to drive a lot of demand. So we just have a lot of growth ahead of us. We're just trying to pick some partners and figure out whose money we should take because we haven't sold any equity yet.
Nice, yeah. Glad to hear that. And yeah, I guess for you, you're focusing more on New Zealand and next Brazilian dollars. Do you have any insights on adoption, I guess, let's say in Southeast Asia? Or are you looking towards any other regions beside these two?
Yeah, look, we've been looking at the Pacific, Australia, and Brazil in terms of currencies. Then we're looking at gold and silver, and you got to understand when it comes to metals, it's not gold in Switzerland is not the same as gold in Australia. What we're finding is that wealthy investors are not happy just having all of their gold with a custodian in one country. They want to diversify because of geopolitical risks. They want to have their metals in multiple jurisdictions. So that has a little bit more friction to it because you have to tokenize and deal with custody in multiple jurisdictions. But I think we can do some really crazy things that nobody in the stablecoin business has done before, where we can create algorithmic stablecoins that are 100% collateralized, like a basket of assets. Have you come across the International Monetary Fund's special drawing, the SDR, the global currency?
No, actually, kindly enlighten me on that.
Yeah, so the SDR was conceived, I think, in 1971. There was a famous cover of Time magazine with a phoenix rising, and it said, "Get ready for a global currency," and it actually said 2022 or 2021, I can't remember which one. And so what it is, it's still live today. It's 20% USD, 15% Euro, 10% CNY. It's a basket of fiat currencies, and it's rebalanced only every 5 years, and there's only 5 or 6 constituents in it. And so if you look at the SDR, this basket of assets over the course of 10, 20, 30 years, it loses less purchasing power than any one currency. So you don't have to think, oh, just finished trading Bitcoin, I've taken some profit or whatever, I'm going to move my money back into USDT or USDC. But you don't really think, was the US dollar going to retain its relative purchasing power? If you know the Big Mac index, which is like a measure of how much of a local currency is required to purchase one Big Mac, that's a measure of a fiat currency's purchasing power. And so we back tested this concept where we have 5% wrapped Ethereum, 5% wrapped gold, 5% wrapped Bitcoin, 15% euros stablecoin, 5% New Zealand dollar stablecoin, 35% USD stablecoin. We have this sort of basket of mainly stablecoins and a little bit of crypto and gold. And it's outperformed, it doesn't lose money to inflation. It's outperformed everything over the last 2 years and the last 20 years. So we're thinking, well,
it sounds like a crypto all-weather portfolio.
Yeah. So like you just don't need to think. You just go, here is my value. I normally denominate it in Singapore dollars if you live in Singapore. I normally denominate it in US dollars because I live in the US. But now, for the first time in history, people are actively thinking, is this currency going to lose value and purchasing power? So we're thinking maybe we create like a macro stable asset where you don't need to think. It's just, you put it in this thing. It's hugely liquid. It's instantly redeemable. You custody it yourself, just like any other crypto. And it's diversified across 5 or 6 assets, and it doesn't lose purchasing power. And so, we're not just thinking in a conventional centralized sense as a stablecoin issuer, as an infrastructure provider. We're thinking, how do we solve world problems by creating super easy to access DeFi products that you could just rotate value into at a click of a button and avoid losing purchasing power.
Yeah, okay, great. Thanks for sharing that. And besides, let's down to my last few questions. For anyone here with any questions for Fran from Techemynt, yeah, kindly just request to speak along the way, or type, if you're shy, just type your questions at the bottom right hand corner. And yeah, I guess right now, I just out of curiosity, you say you already have around 6 neobanks you're working with to integrate down the road. Hopefully, towards the end of this year or next year. How do you guys approach them and educate those banks regarding the use of stable coins and the benefits as such?
Most of them know me because I hosted New Zealand and Australia's first Bitcoin conferences in 2014, 15,
Oh, wow.
16. We had Andreas Antonopoulos, we had Vitalik Buterin. We flew all these people in back in the days when it was like, oh, you get out of here, you crazy kids. This crypto stuff will never work. And then years later, those same people invite us to keynote their speeches for the future of money or Payments New Zealand or whatever the case is. In New Zealand, it's a small industry. We've had a lot of people after our first PR release, they're like, oh, thank God there's somebody that we trust that is doing a New Zealand stablecoin. We can use that in our neobank. And so it was relatively easy because of our reputation in that regard.
Okay. Yeah, that's great. And yeah, I guess that's about it for me. But yeah, that's great to hear that glad to know that you hosted the first few Bitcoin conferences in New Zealand, and thanks for furthering the space, even at such an early stage back then. And yeah, for the audience, that's about it for me. Do you guys have any questions for Fran or Jeff? Jeff Richards, do you have any questions?
Hey, I was just hanging out to keep you company. But no, I tell you what, Fran, one of the things I was looking at when you were talking, some really cool stuff. I'd like to throw a number on something, actually. Remittances. World Bank reported something like 6% is the average fee on remittances, which makes it absolutely ripe for disruption. But what I was thinking is, I noticed you guys have got Polygon as your next sort of chain idea. And I was just thinking in terms of liquidity and things. As you expand your DFX pools, expand across chains, how do you manage that liquidity? Because being over collateralized or being fully collateralized is really important certainly in the current market. So how do you manage that liquidity moving?
Yeah, look, Jeff, that's a great question. So our biggest restraints to growth is our own balance sheet. If we had a spare $50 million, like Tether could just pre-mint 50 million USDT on the back of a promissory note from whoever counterparty. We can't do that. We chose not to do that. We chose to be wholly collateralized. So we have, I don't know, 4 tier 1 exchanges asking us to list. We have, I don't know how many tier 2 and free exchanges asking us to list. And we don't want to go and list too quickly on too many places because each one of those requires us to front load liquidity and inventory onto it. There's no point listing unless there's something in the order book. So we have exceptional market makers and we've got great partners in that regard. And we're currently doing a Series A, quite a large one, to beef up our balance sheet so that we can come along and say we've got the liquidity to load up into these order books and expand to a growing number of on and off ramps to make ourselves available. But that's a good problem to have. That's a sign of a business that's in demand. So we're hoping to complete that by Christmas and then basically just be a lot more liquid everywhere you find it. And by the way, those 6% remittance costs, I think Western Union should be criminally charged. It was 60% to remit from Canada to Mexico at one point in 2016. That's insane. If you're a low-income earner and you're just sending money back to your family in your home country and you have to pay 30, 40, 60% for the transfer, that should be criminal. And now you have cryptocurrencies and stable coins. You can send the money back very quickly and they can convert it on whatever decentralized AMM to a local cryptocurrency that they can deposit at their local exchange and wire it back to their bank account. And that's the way the world's changing and going, and we're quite excited about that.
Yeah, absolutely agree.
Yeah, and then actually we have Request Finance here who has a question. So yeah, kindly unmute and speak.
Hey, friend, Ivan here from Request Finance. You mentioned just now that you were looking to grow your adoption of as a mode of payment. You said you already pay people on your team in terms of salaries with NZDS stablecoins. Could you tell me how you're managing that right now?
Sorry, which part? If we get an invoice and it's please pay $10,000 or whatever for the monthly invoice, we'll literally just send it to their nominated Ethereum or Polygon address using NZDS or USDC or whatever currency they're asking for. But
I was just curious because we're a invoicing platform crypto invoicing platform specifically that launched in January of 2021, and since then we've done almost $250 million worth of crypto invoices. So we'd be really interested in listing NZDS as a payment option so that people can use it to manage global payroll and international trade.
I got it. Okay. But you should definitely direct message me. I'll add you as a contact and we should have a chat. But yeah, in the back office, unfortunately, when we make payments to our contractors overseas, we use Xero. It's like Inuit or any of these accounting packages. Xero doesn't have a sufficient cryptocurrency module. So the girls in the back office actually have to manually create manual transactions in our accounting package after the money's already been sent. In fact, it's funny because it takes way less time to just send money than it does to reconcile it in the accounting package.
So I think you'd be glad to know that we actually can do all of that in Request Finance, and all of that integrates directly into Xero.
Awesome. Yeah, let's talk. Please message me.
And yes, it's truly having a lot of demand right now. Even VD on the Twitter Spaces itself. That's really amazing. Yeah, thanks a lot, Request Finance, Ivan. And yeah, I guess if the rest of you have any more questions, you guys can kindly ask. You can tweet at us as well if you're shy, or send it towards our Telegram or Discord. Yeah, and thanks, friends, for your time. That's a full hour. Yeah, I really appreciate it.
Not a problem. It's a pleasure. I can talk till the cows come home about these products, but I hope everybody learned something and walked away with a bit more knowledge. So thank you very much for facilitating and hosting Blue Jay. It's much appreciated.
Yeah, no worries. And thanks for sharing with us your vast knowledge and how early you were in crypto and how you're building it out in New Zealand. It's really a feat to be able to be the number one stablecoin in New Zealand, and really glad to have the alpha that you're already working with so many neobanks to bring it to the forefront and get more consumers to use it, even without knowing that they're using it. Yeah, to bring further adoption.
That's the key. Hey, thanks so much.
Yeah, thanks, friend.
Yes.
Yeah, if not, that's about it. Thanks, friend. Thanks, Jeff Richards, for accompanying me, and thanks, Request, for asking a question. For the rest of you, any questions you have, you kindly just tweet at us or tag us, tag friend if you need to, or just send it to us our Discord, Telegram. And in case you guys do not know, we have Oat that we are giving out, Galaxy Oat, which is like a poet for the Twitter Spaces, and I already pinned it in the Twitter Spaces itself, the tweet there. You can just click it and go towards the link, and you can go ahead and claim yourself an Oat. Yeah, so that's about it. Thanks for your time, everyone. Good morning, good night, and good afternoon, wherever you are.